Good morning and welcome to the Quantum Leap Futures Morning Leap session for Monday, June the 13th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together to take a look at the market macro to micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. Before we get going, please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that see in Quantum Leap are for education purpose only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's get rid of this. Well, Friday was a pretty good day. Played out exactly as we expected it. I'm trying to find it. Okay, there we go. All right, so let's first take a look at the news for the day. Just let me update this. So today we've got 9:30. We've got Great Britain CB leading index. You know, I don't really pay attention to Great Britain, but basically with Brexit, I'm watching what's going to go on with that this week. That's about it. So we really don't have any news for the day. All right, so just going back to the basics, just want to see where we are in the trend of things. 9 EMA, 20 SMA, candlestick chart. We've had this long trend up. They challenged. We're holding the trend. We don't even challenge the trend on the monthly until we get down to the 2038.19. Going to the weekly, good slope, good separation, going up. Oops, I jumped ahead, sorry. Daily, you can see that we've now challenged the trend and we're coming down. Key level to watch today is the 1274. I'm watching that 1270, which is the mid-gap fill. Going down to the intraday, you can see we've rolled over. We've got good slope and separation, so we've got a downward trend going on right now. Plus, we've got major news over the weekend that's going to be valued into the marketplace this morning. 1 hour, same thing, but we're coming into consolidation, getting some support. Some buyers are coming in the 78, 75 level. Going down to the 30-minute, going sideways and consolidating. And then the 5-minute, basically we're in a consolidation. So we're at a interesting point. Now I did some, a little bit of homework last night, and I just wanted to bring this in. Where's my chart for it? Trying to find the picture. Hold on a second, I gotta go get it from the room. There we go. All right, so this is a longer term weekly chart. And I really, I don't generally go out this far, but this pattern really, just where the structure of everything lines up, it's very interesting. So you've got a zipper coming in. This is a weekly chart on the continuous contract. You've got the zipper coming in. Energy is released down here, and then we create this zipper. And then we rotate back up to the middle of this zipper, which also happened to be the microcomposite VPOC for this particular period of time. Rotate down. We have no support. They come down. They find buyers down here in the low 1800s and then pop. Go back to the 38% retracement and test the middle of this zipper right here. Then go down, create the week low, and then finish the pattern with a strong weekly trend that we had up, coming back to the middle of this zipper to create the right side of the W pattern. Now we're going sideways, and we've had our first peak out through the top of the zipper. So it looks like they want to release energy to the upside, but because of where these numbers are, they also present some opportunity for us because we can play it against a longer, and I'm talking this is a much longer time frame, and trade the smaller rotations here. But giving us guidance of some very key support levels. So those key support levels are at the 2109.50. That's my key line in the sand for this whole pattern. And then below, we've got the middle of this zipper and the retracement up to create the middle of the W in around the 42 and the 35, and I'll show you why that's important when we get onto the composite picture. And then you've got this double bottom down here near 1800. If we break this W pattern to the low side off the week low, the week double low, then we're likely to get a much bigger retrace, and that will probably be the start of the major downward trend. But right now we can trade through this level here using 2109 as measured moves up into the 2226. And again, this is not a 1 month or 2 month. This is a bigger structure we're playing against. So, you're not thinking in terms of, oh, we're going to go up and hit 26 this week or next week. It's just, this is longer term goals, but we've got some key levels we can really trade out from or take rejection to. So if we reject this 2109, I'm expecting if we don't break it again, we're going to have to come down into the 42 to 35 level. And I'll show you why that looks so appealing, is when you go into, what's going on? Sorry, gang. Okay, there, I was on a picture of it. Wow. Okay, so let me show you what that looks like. So right here, obviously the 2109.50, or you can even use the 2110.75 is going to be the breakout point that you've got towards that first target. That is the measured move on a smaller daily time frame. But if we can't hold the 73 level here, then we're coming into this distribution. And I'm still using that 69.75 number as my key line in the sand below, because below that I think we get a shot down to test the upper value area of this longer time frame microcomposite that's sitting right here at the 66.75. So I can use the break below 69.75 to trade into that testing of a key support level. But once we're inside there, then based on the larger weekly pattern of the W, the destination point is the 42, and that makes perfect sense because that is not only the composite VPOC, the most traded price going back to 2013 January, and the microcomposite VPOC within this other structure that we've been playing these two value areas, and then the breakout, and came down to retest this. Then we got the breakout, so we're playing against this structure right here. But once we're down there, then we've got a really nice short into 41, 42, with 35 coming in as the next support. I'm really looking at the 31 level because that's where we had this balance over here. But this will be a nice setup to the short side. I think if we get below the 73 is your warning line, 69.75 is your key support level, with the first target to test the value area high at 66.50, and inside of that we're back into this undetermined fair value within this distribution point. This has to be matured. We will come back down here. It's just, do we continue up higher and then return down here, or do we come down here first, find the buyers that we need to make the last break to the possibility of those W patterns on a longer time frame. Okay, this is going a little long. So numbers for this morning, you want to watch the 79. That's going to be your balance right now between 75 and 79. If they can get back above 82.50 area, then I'd be moving and looking for a target up here at the 89.75 with those 92s and 95s just above it. So let's take a look at the let me find the right chart here. All right, so our main hypothesis for Friday was we were going to get an open auction in range, then come up and test into the 90s, possibly into the low or the value area low of the prior day range, and then find initiative sellers and rotate down through to that 85 level, and then the 82, and then we didn't quite get to the 78.50, but we got to the 79.50, and then they rotated back up into the balance and around the 88. It was a great hypo one. Go listen to the recording. It was dead on. Okay, so let's take a look at what's happened overnight. So on Friday we had this double distribution zone, and so far overnight we've been just trading inside of this double distribution. Now this creates an opportunity for us because of the fact that now if you take Friday's RTH and last night's Globex, or this night's Globex, we've got a clear double distribution setting up here, which double distribution days are great to trade because you've got two main targets below the area of rejection. So you've got high price acceptance with an area or pivot you can use to, if you're above it, you want to be targeting the VPOC from Friday and the 2-day microcomposite VPOC. So the most traded price so far, even in the Globex and in the RTH session, is still above. Watch to see if that shifts down to the lower distribution. But these days are good because you can, if you get above this this 85, and we'll take a look at I would use the LVN, which would be the 85.50. To get long above. To get short, I would use below the 83.50. We've got this little bit of a no man's land right here between the 85s and the 83s. You get a little bit here at 83.75, you see. So you want to really be above 85 and a quarter, to strengthen your longs or look for opportunities to get long. And then you want to be below that 83.50, and you want your target below right now is the 81 to get funded, and then to see, we're creating this zipper here, waiting to see if we break down and go down and get below that 73 and go test that 69, with a case if you do break 69, getting in and getting funded short towards those key levels at 66, 67. And then look for continuation and the possibility that we come back down into this balance area again. If they don't hold the 69.75, I think they're going to get aggressive to the short side, and then we see if we hold in the 66 to 69 level. Anything below that, you got to be targeting the longer term balance again, back down into the 52 area, and then down into the 42 area if that doesn't hold. Okay, so let's grab our overnight session, start putting our levels in. We've got overnight high right now of 84.75. Overnight low at 77. And so far the VPOC is here, but it could shift. But right now it's at 78.75. And that's about all we need from the overnight. The key to overnight is we basically have been filling in the lower distribution and creating a Gaussian formation, a bell curve, to finally mature this area and then make the move, either back up into former balance or go make new balance below and revisit some of the numbers below us. So let's get rid of this. Expand this out. So right now we've got a couple key levels we're going to mark right away. So 77.75 is going to be moved up into 79.50 with the target of the overnight low at 77. And then looking for possible continuation down to our daily ATR. Let's put the daily ATRs in. I'm sorry, I'm late to my desk this morning, so I'm doing this on the fly. So our overnight high, excuse me, our overnight high is 84.75. Our 20-day ATR target is, or ATR is 2011. It's compressing still. So the low side is 2064.75. And the high side at 20, what was the overnight low? 77 plus 2011, 2097 and a quarter. That's right on the range, high or low. Okay, don't get that there. All right, so those are the dailies. I'll do the weeklies later. They're not going to come into play, so I'm not going to waste time on this video trying to find out those right there. Okay, so obviously the most important number to us right now today above us is this 85.50. 85.50 represents the LVNs on the microcomposite, the LVNs from the double distribution, our overnight high, our value area low from Friday. This is a key level. So anything above that, you want to be targeting into the 89s, and then nothing really as any type of resistance until we really get up into the top of this day, except for this 89.75. So I would be looking at the 89.75, then everything's going to be about this 95 and a quarter level. And that'll probably, above there, that'll probably give us a push into the 2100s again and see if we can continue or not, or fail with a lower high. So that's going to be key here. Anywhere between 93 and 95. It's really a wide, you can see how thin the volume gets down here, and you're in that gap zone. So level there, that all looks good. And then below us it's 73, 69, key line in the sand. Remember that 70 and a quarter is the, 70 and a quarter is the mid of that gap zone, and it's right above our key line in the sand. And then below that, I'm targeting 66.50. You can use 67. I would look to get funded and scaled by 66.50. And then below that, I'm looking for that move down into the 62 area, 61 area, and towards that daily downside ATR target. I'll adjust this later, so I'm just going to erase this right off the screen. And then you get the 51, 49, and then again, everything's going to be centered around coming back in here based on a longer time frame if we can't hold that 69 and down towards this 41. And there's just so much down there. I mean, look at it. It's just thick as thick, thick, thick. All right, so let's go to our upside targets. They're all in, so let's just do our hypotheses and get through this. All right, so right now we're going to be opening just outside of range or just inside, but definitely outside of volume. The most important thing is you're going to open up in a distribution zone or you're not. And your first real trade is going to be, can they get back inside at 79.75 and rotate up into the overnight high and test the the key level that we're going to be watching today. And this, again, let's put that in. This is our key trade line. This is what double distribution days give you. So this is our key trade line today. So be sure with short, as long as we're below it, what you want to do is you want to be looking towards the lower distribution of this and the failure to stay inside of yesterday's range. If we reject this, you've got clear targets below. With the first target, I would be targeting the overnight low and then a test of the 73. Otherwise, it's going to be choppy in this area right here. It's going to be really hard to trade in here. So the trade is a break above 79.50 to test through the lower distribution and up into the 85.50, and anything above 85.50 a move up into the upper distribution and a test to the other side of that balance and the value area high and that key level up there at 95.25. That takes us back up into this thin area and back up into this 3-day distribution to find price acceptance somewhere for the next leg up. But we've got well-defined areas both on a daily and on a weekly and on longer-term composite structure. So we're actually, even though we're at all-time highs, the market is actually structuring itself for us pretty nicely. So especially with the volatility that we're going to have coming into this week. Excuse me, 1 second. I'm going to shut down the recording for a second. Sorry about that. So we've got clear structure to work with, even though we're in some interesting areas and interesting time for news with Brexit and Fed and quad witching. Remember that this week is quad witching. So hypo 1. Hypo 1 is really going to be a hybrid hypo 1 because it all depends on whether or not we reject 79.50. So if we reject 79.50, I'm getting short. I'm looking and I'm targeting that 76 area, but really I'm targeting the 73 to test that. If I get below 73, I expect it to chop around on here and testing that key 69.75. If we break that, I'm looking for continuation down into the 61 area and give our first test down. That's based solely on we reject the range from Friday and continue lower. And the reason I'm looking at this as my primary is that I do expect with this sad occurrence that's happened, and I haven't even really had a time to look into it because I've been busy with other things, but I know there was a mass slaughter and a terrorist attack on the U.S. soil again. So that's going to probably affect the markets in that side. And I would give a minute of silence at the end of this, just to honor those people that lost their lives. But this is financial, so let's just continue. So hypo 1 is a open auction in range and an open test drive to test the 85 level, take out that overnight high, or reject the 79.50. Until we get back above the 85 and we're below the 79, I'm looking to stay short into this area. Hypo 2 will be a possible rotation down to test the 73 or just break into the prior day range, come up here into the upper distribution and just sort of chop around in this middle distribution of the lower distribution from Friday until we find some buyers. So just chopping around here and then getting a continuation wave up into the upper distribution of the double distribution day. Boy, I'm saying distribution a lot. And up towards this 88 area with a possible push through value and testing that key 94. So that's hypo 2. Just a move up, get above the 85 level, and then chop through the upper distribution and test the other side of balance up at the 94 and complete a 80% destination trade based on value up here with a possible late day probe back up into the 97, 98 area. But I think it's going to be a rather tight day today. And I think we're either going to chop in this area with a test lower, or we're going to get back above the 85, 50 and chop around in this upper distribution and possibly probe. I think I'm looking for a late day probe based on which structure is accepted or rejected. So that's my hypos. I'm only going to do the 2 hypos today because I think it's going to be a testy, feely type trading day. Buyers and sellers are going to test different sides and different levels in this area. So just keep it tight, and it's Monday. We got a lot of trading week, a lot of trading opportunity based on news. So, but we're great with structure. I'm really happy where we're looking. So that's going to complete our morning session. I'm not going to do gold this morning because I'm not prepared for it. I haven't even looked at it. This is my first look at it. So we're basically broken out of this this balance area. We came up and hit that 85.70 target. We've got value area above us at 1290. So I'd be looking at that 1290 as a, well, you can see it's rejected it already off of overnight and come back. So I would use the 87.90 as a upper trade level. Anything above that, look to test the high. And you can get in, get funded, and see if they get a breakout and come up into the 96.40 level. Key level I'd watch below if we can't hold would be this 82.20, maybe even 81.30. Below that, look for a move back down into the 12.72 area. Okay, that's going to complete our pre-market session, as always. And I'm sorry about the interruptions and everything. And remember, when we're done this, let's just give a moment of silence for those dear people that lost their lives. Trade well, trade safe, and we'll catch you on the flip side.